Sergio Martian was not a car guy. Born in the small Italian town of Chieti in 1952, he moved to Toronto at 14 when his father, a carabinieri officer, retired. He collected degrees the way other executives collected watches. Philosophy from the University of Toronto, law from Osgoode Hall, accounting from the University of Windsor, an MBA from the University of Windsor as well. By his mid-30s, he was running a Swiss quality inspection company called SGS. And in 2003, John Elkann, the 27-year-old heir to the Agnelli dynasty that controlled Fiat, put Martian on the Fiat board. Here is the situation Martian inherited when he was named Fiat CEO on June 1, 2004. The company was losing roughly €1 million every single day. It had burned through 4 CEOs in 3 years. Its market share in Europe was collapsing. General Motors had a put option that could have forced GM to buy the whole thing, and Fiat's own board was quietly hoping GM would take the misery off their hands. Now here is the forward hook I promised, because the very first thing Martian did on day one was not what you would expect. He refused to move into the executive suite on the top floor of Fiat's Turin headquarters. He walked past it, took the elevator down 4 floors, and set up his office next to the engineers. Within a week, he had fired 10 senior executives. Within 2 years, Fiat posted its first profit in a decade. And when a reporter asked him why he never wore a suit, always that same black sweater, Martian answered, quote, "I will wear a tie the day Fiat is debt-free." That day was still 10 years away. But what he did next is what makes this story legendary. If this story is gripping you already, save this video because you will want to come back to what happens next. It is the winter of 2008. Lehman Brothers has just collapsed. American auto sales are in free fall, and Chrysler, once the pride of Detroit, is bleeding to death. 2 years earlier, in 2007, the private equity firm Cerberus Capital Management had bought 80% of Chrysler from Daimler for $7.4 billion. By late 2008, that investment was worthless. Cerberus was begging the U.S. Treasury for a bailout. President Obama, sworn in on January 20, 2009, created an auto task force led by financier Steve Ratner. Ratner's mandate was brutal: no free money. Chrysler needed a partner or Chrysler was going to be liquidated. Ford would not touch it. Nissan Renault passed. Volkswagen said no. Then Martian flew to Washington, and here is what the news coverage missed. Martian did not bring a bid. He did not bring cash. What he brought was a spreadsheet. His pitch was almost insulting in its simplicity. Fiat would take an initial 20% stake in Chrysler for $0. In exchange, Fiat would hand over the small car platforms and fuel-efficient engines Chrysler desperately needed to meet new fuel economy rules. Fiat could earn additional stakes, up to 35%, then eventually a controlling stake, by hitting specific milestones. Build a car that gets 40 miles per gallon in the US, take Chrysler back to profitability. Repay government loans. Ratner's team was skeptical. Chrysler's own CEO, Bob Nardelli, the former Home Depot chief who had run Chrysler for Cerberus, was pushed out. On April 30, 2009, Chrysler filed for Chapter 11. 42 days later, on June 10, 2009, the bankruptcy court approved the deal. Fiat, contributing not a single dollar, walked out as the operational owner of the Chrysler Corporation. But this is where the real story begins. Here is what almost no one in Detroit believed on day one: that the same skinny European hatchbacks Fiat was famous for could ever save an American truck and SUV company. Martian knew this, so he did the opposite of what the analysts predicted. He did not try to Europeanize Chrysler. He weaponized the one American asset Chrysler was sitting on and had almost forgot how to sell: Jeep. In 2009, Jeep sold about 337,000 vehicles worldwide. By 2016, that number was 1.4 million. Martian pushed Jeep into China, into Europe, into Brazil, into India. He built a factory in Guangzhou. He launched the Renegade, the Compass, the Cherokee, a redesigned Grand Cherokee. He resurrected the Ram brand as a separate truck division, and the money followed. Chrysler repaid its $7.6 billion in U.S. and Canadian government loans in May 2011, 6 years ahead of schedule. Martian famously handed Vice President Joe Biden a giant symbolic check on a stage in Toledo. By 2014, Fiat had purchased the remaining shares from the UAW's healthcare trust for $3.65 billion and merged the two companies into Fiat Chrysler Automobiles, FCA, incorporated in the Netherlands with tax residency in the United Kingdom. Then came 2015 and the deal that stunned Wall Street. Martian spun off Ferrari as an independent public company, listed on the New York Stock Exchange under the ticker RACE. The IPO opened at $52 a share. Within a year, Ferrari's market capitalization exceeded $10 billion, and today it is worth more than General Motors and Ford combined. Think about that for a second. A sports car company that builds fewer vehicles in a year than Toyota builds in a morning, was now worth more than the entire American automotive establishment. That is not luck. That is engineering. Drop this in the comments. Would you have believed a bankrupt Italian firm could pull this off? Because the boldest move of Martian's career was still ahead. In April 2015, Martian released a 25-page presentation to the auto industry with a title in giant letters, Confessions of a Capital Junkie. It was an argument, backed by data, that the global auto industry was destroying capital by developing the same engines and platforms 12 different times over. His conclusion, the industry had to consolidate, and FCA needed a merger partner. He picked his target and made his move. Wrote directly to Mary Barra, the CEO of General Motors, proposing a merger of FCA and GM. Barra rejected him, publicly, coldly. Martian then hinted he would go hostile. He never did, but his final years were a race against a clock only he seemed to hear. On June 1, 2018, Martian stood on a stage at the Fiat test track in Bacalao, Italy, to present his final 5-year plan. He announced that FCA would be net cash positive by the end of the second quarter. Debt-free, the impossible had been achieved, and then he did something no photographer missed. He walked onto that stage wearing a suit and tie, first time in 14 years. He kept his promise. 6 weeks later, on July 21, 2018, the Agnelli family issued an emergency statement. Martian had suffered complications from what was described as a routine shoulder surgery in Zurich. He never regained consciousness. He died on July 25, 2018 at the age of 66. There was no succession plan. Mike Manley, the head of Jeep, was named CEO within 48 hours. Inside FCA, the mood was described as a family losing a father. Elkann said in a public letter, quote, "What I learned from Sergio has neither price nor limit, and here is the twist almost nobody caught until later." In that Bacalao speech, when Martian unveiled the future product lineup, he outlined a plan that only made financial sense if FCA merged with another automaker. He was already positioning the company for the deal he would not live to sign. In January 2021, FCA merged with the French group PSA, Peugeot, Citroën, Opel to form Stellantis, a $52 billion automotive giant. John Elkann became chairman. The vision was Martian's. He simply did not survive to see it named. CTA 12001300. If this story rebuilt your view of what a single operator can do inside a broken business, subscribe and hit the bell icon. A new true money story every week. Corporate rescues, hidden fortunes, deals that rewrote whole industries. This channel is where the real business history lives. Subscribe, hit the bell, because the next story is one you will not want to miss. Outro 13001500. Sergio Martian is remembered for many things: the black sweater, the 20-hour workdays, the 4 cell phones he carried constantly, the fact that he was never seen without a Murati cigarette. But his real legacy is a lesson most of Wall Street still refuses to learn. Real value is not created by financial engineering. It is not created by leverage. It is not created by cost-cutting and layoffs. It is created by taking a company that has forgotten what it is good at and reminding it. Jeep did not need a European makeover. It needed a global salesman. Fiat did not need a new balance sheet. It needed a leader who would sit next to the engineers. And Chrysler did not need a bailout. It needed a partner who saw what Cerberus never could, that the value was in the brands, not the debt. Martian bought Chrysler for $0 because he was the only person in the room who understood what Chrysler actually was. If this story hit for you, the next one will stun you. Because there is another man who walked into a dying American icon with almost no experience, made a single controversial phone call to a Japanese carmaker, and saved Ford Motor Company from Chrysler's fate. His name was Alan Mulally, and his story is coming next week. Until then, measure twice, decide once, and never let the sweater fool you. In 2009, an Italian executive in a black cashmere sweater walked into Auburn Hills, Michigan, and took control of Chrysler for $0. No cash, no auction, no bidding war. His name was Sergio Martian, and by the time he died on July 25, 2018, he had turned 2 bankrupt automakers, Fiat and Chrysler, into a global business worth more than $60 billion, spun off Ferrari at a $10 billion valuation, and laid the groundwork for the 2021 Stellantis merger with Peugeot. This is the full story of the accountant who never built a car, the deal Steve Ratner and the Obama Auto Task Force approved in 42 days, the confessions of a capital junkie presentation that rewrote industry strategy, and the promise about wearing a suit that Martian kept only weeks before his death. Chapters 00, 00 the impossible deal 01, 00 the man in the black sweater 03, $000 for Chrysler 06. 00 Jeep goes global 09. 00 the suit he finally wore 12. 00 subscribe 13. 00 the Martian legacy new true money stories every week. Subscribe and hit the bell.